Please read this disclaimer carefully before proceeding further. Welcome everyone, this is a new edition of DXY analysis for this week. Thanks for joining me in this analysis. My name is Vic. Hope you're doing well. Now what we're going to do in this one is actually kind of like reset the DXY analysis because it has created new structures, and if you have been following my analysis, we have been long on USD dollar DXY from 91 level, which is around here, and we have been monitoring this level for a few months now actually, and the market has started to move upwards and now it has created new structures. So let me actually revise the entire thing where the market has been. But before we go there, what we can do is just look at what has happened. So we came up with these two particular zones, and especially this yellow zone. This actually was found at the start of the September, so late August. If you go and check out the analysis which I posted in the 3rd week of August and 4th week of August, you will see me mentioning about this particular zone. And since then the market has not stopped. In fact, it has been picking up speed. I also posted that there is an inverted head and shoulders here, and which is actually in effect right now. So at the moment, if you just look at it, this hasn't actually gone to its full full potential of head and shoulders. Ultimately it is supposed to reach that 95.62 and this particular zone that we identified last month. So everything is already pre-planned, and that's how we do it. With FCP strategy and the way we analyze, we start analysis from higher time frame and we predict, because our analysis needs to be predictive but our execution needs to be reactive. If your execution and analysis are both reactive, then sometimes your trades will work out, sometimes they won't. So the steps are, you go and look at the structure, the entire structure, the biggest possible structure. So basically you go to the higher time frame, because higher time frame are more important than anything else. Then you start looking for important structure levels, important barriers in the market such as support, resistance, supply, demand, important Fibonacci levels, because most of our analysis is based on Fibonacci. So we give the most importance to our Fibonacci levels. So once we have drawn that, and once we have created our SCP zone, which is basically a Fibonacci Confluence pattern zone. Once we have created FCP zones, pretty much like these ones, they are highly accurate because lot of high potential Fibonacci levels and other factors are lining up in those zones. So these are FCP zones. Once we have done that, all we have to do is just wait for the market to come there and give us some kind of confirmation. We use, in our FCP strategy, we use 5 types of confirmation. So we wait for a confirmation in that zone and then we start to execute. Now if the market actually keeps on going up or down, we do not care, because we already know important levels where the market can go to, and these are all the levels. We were able to identify these levels in advance, weeks and months in advance, and so far what we can see that the market may go down or up. We do not care. If you are taking a position, if you are building a position, then you do not care. In fact, you can buy the dip because you are already aware that it is supposed to go to this level, which is coming from higher time frame. So that gives us a lot of predictability power, and that also gives us a lot of confidence in our strategy in execution. So there are no emotional downfalls or anything like that. If you want to have more, if you want to learn more about this, there is a new brochure which has come out, and you can find this about this training on Vikinsa.com. You'll find link and more details about this training in the description as well. Now, so let's do one thing. Let's remove this entire thing, and I will talk to you about the entire structure, how I analyze this entire thing. So what I will do is I will go to the 12-month chart, right? On 12-month chart, what I can see that market is kind of it created kind of double top. Now this is not exactly double top as per se, people have different kinds of definitions of double top, but you can argue that yeah, because it came to near about the same level, that's why it is doing that. So market came here this level and fell down because of some reason. We'll see that in a second. And then it started to go back. We tried again and then started to fall back down. Okay, that's fine. And this is 2020. So in 2020 it was supposed to go down. I'll tell you the reason why. Because if you go to USDCAD, I'm not sure whether you have been following my analysis on USDCAD, but if I show you USDCAD, it's doing exactly the same thing. This is the trade that I was able to take as a position trade because I could find an FCP pattern and FCP zone on monthly time frame. So if I just do this, this was supposed to complete a W pattern here, and that's why it was supposed to fall down. And I posted this on YouTube channel a while ago, and because this created kind of double top here on USDCAD, that is why DXY also started showing the similar kind of thing, and that's why it has been falling down. So everything is connected, right? Now from 12-month chart, what we can do is we can go to the monthly time frame, and this is exactly how we do it in our methodology of FCP. What we can see that market has created this W structure here. There are complex W patterns here, but if we just focus on the main one, this is what we have. Okay, let me just quickly change the color of it so that you can see it properly. So this is the leg we have, and then we had an upward leg, and then market is going down, and then market started to go up, and it went to this place. Now this has not completed a W pattern, because this pattern, according to our Fibonacci ratios, according to our studies, it needs to go to somewhere around this level, okay, which is 110 level. But because there was a Fibonacci level 61.8, and that is why the market started to fall down. Okay, so let me just quickly put a line there. Alright, so the market started to fall down because of that 61.8. so let me remove this. Now we have it. So this is how we read it. Market came here, it fell down, and look at this period of $4 was even worse than what we had now. So why we have so much of noise in the market saying that dollar is getting weaker? It's not. Look at this period, from in 2017 to 2018, this entire month it actually fell much harder, much larger magnitude. So this is nothing. So do not worry about fundamentals as such. The dollar is getting weak. Maybe it is, right? But the chart do not lie. The charts are telling us that this is nothing as compared to what we had before. So what we should do is we should just stay objective and trade what we see. Okay, what we can see that market came here to 61.8, fell down, it tried once again and then started to fall down. Okay, that's fine. Now what we can do, we can see that market has created this M pattern, possibly an M pattern. So if the market breaks through this level of 88.23, then it is supposed to come to somewhere around this level, near about this level or so, right? This is going to be refined because there is still a lot of the journey it needs to cover. So this level can actually change a little bit, but you can expect that M pattern to complete somewhere around here, and I can say that because of the Fibonacci ratios that we follow. Okay, so what has happened so far? In my previous analysis I mentioned that we had give me just 1 second. Okay, so in the previous analysis I mentioned that we had Vata cluster moving average here in the month of August, and I mentioned that if the market closes below July and it touches Vata cluster moving average, then we were expecting a bullish move, and there are several factors to it. You see that there is an inverse head and shoulders pattern which is forming, right? Which basically means that 102 is actually a neckline. If it gets broken, then you see where the market can go to. It can go to all the way to near about 116, right? And that will obviously reach 110, which we identified anyway, right? So that's a possibility. That's a bullish possibility. At the same time, I also mentioned why this level of 91.91 was important was because of this support line right there. This is the structure we were looking at. So 91.91 confluencing nicely with our water cluster. So two factors. Other thing that we could do is we could draw Fibonacci on it, and we could see that market came to 61.8, never showed a reaction. So it was probably going to, like, go to the water cluster moving average and then start to have a late or delayed reaction. So now we had another factor which is little delayed, but we are already looking at this particular zone. Okay, now let's go down to the weekly time frame. And what we can see that market has created an M pattern here, right? This is an ugly looking M pattern, but nonetheless this is an M pattern, and when M pattern completes, the market is supposed to go up. So we were looking for a bullish opportunity here, right? Other thing that we could see is that if I draw Fibonacci extension on this leg, right, 161.8 was approximately coming into that zone, right? It can be a little overextended because it wanted to go touch that moving average that we had, but we also have that. We can also draw Fibonacci extension from all the way to this place, right? So not much is lining up here on the Fibonacci extension, but this one is very close, 161.8. That's very, very close. So that's how we build our case. Another thing that we could do is Fibonacci extension on this leg, and that is also looking at 127.2. so this is looking like a very good zone for us to take a trade. Okay, so this is how we planned it, and we knew that market was going to go higher from there. Now let's go to the daily time frame. If I go to the daily time frame, the market created a divergence or double bottom kind of setup here, right in that zone, right on that level of support, and that is why we were able to take this trade, right? And if the market is actually moving higher like this, then in terms of the profit targets, what we can do is, give me just one second. Okay, in terms of the profit target, what we can do is draw Fibonacci on this leg. The market has already gone past 38.2. Now it is supposed to expect it to come to 61.8, because that becomes a very good level. Why? Because it has previous structure as well, and that particular zone has previous structures as well. Now another thing that we can do is we can also extend this Fibonacci all the way to upwards, and we can see that we have this 38.2 level right there. So that means this is also looking like a good zone, right? And that's where we can expect market to go to. It may be a little lower than that, it may be a little higher than that, but that's what we are looking at. Okay, so that's the place where we can expect market to go to, and this is how we build our case. So what can we expect in the coming week? Because the market has come to this level of Fibonacci level of 23.6, and it is also looking like a complex W pattern, we can expect a little downward move on DXY dollar index. Okay, that may or may not be guaranteed, because if the market so far has been very, very bullish, right? So it can just go and straight to this level and create an extended W pattern. So that's a possibility, right? So if you're long, then I hope you are already managing your positions on DXY. Otherwise, what you should do is do not try to go long until you see a retest, like a break, a downward move. Once you have seen the downward move, once you have seen a confirmation, then you can start to look for a long. Okay, if I go to my MT4 and bring in my water trend and bring in my water trend shift. Okay, and if I go to the weekly time frame, what I can see that market has already started to give me, if you look at the bottom, market has started to give me already a confirmation kind of thing, early indication that it wants to go up, because the color of the water trend has already changed. But that does not mean that it will keep on going upwards like no straight in line. Market does not move like that, right? It will try to take little bit of breaks. So if you just look at the current candle on DXY, this is looking like a spindle top. That basically means that it wants to continue with the trend, but that won't stop it to take a little break, like or for a day or 2 days or maybe 3 days. But the next week is supposed to be a bullish candle, but they can be like a little downward move also to start with. So for next few days you can expect market to move down and then start to pick up. That sort of move is expected on DXY. Remember, this week is very important because this is going to be month end as well. So remember, we are left with only 2-3 days in this month. That means those 2-3 days can be correction, and at the start of October it can start to pick back up. So what we need to do is at the close of the month we may have to reanalyze it. At the moment it is still looking bullish here, and you remember how we took that trade here in that zone here. So what we could have done, if we had water, you can use water for your confirmation. So this was our zone where we were looking for an entry, a good entry. So if you go to the daily time frame, this was your entry, but this is little delayed. So the better way of doing it is actually go to the 4-hour time frame and look at this. This is the perfect entry that you could have got, because the market actually touched that line that we had. So if we go to the 4-hour time frame, that entry signal came right here, and since then it has been moving upwards. So that's how you can have a confirmation using water right there. Okay, so what we can see, that market wants to go up. So far it is creating a huge candle and it may continue to move up. Next month I'm expecting it to take a little break, a downward move. That's also possible. And but for now the next week is going to be very, very critical. We may have to revise this analysis. So let's look at the possibility of bearish side of it. Alright, so we are looking for the next profit target to be here. First profit target was already here, which we have observed, which we have taken. So if the market actually breaks through this, then we are looking for 38.2, basically this zone. But I'm expecting market to take a little break before it starts to move up. And for the next month, even though this is a little far away, we can see that market has been falling pretty hard, so it won't give up that easy. So I'm expecting a little bearish candle, at least one candle bearish, before it resumes uptrend again. On the bearish side of things, there is an M pattern which is also forming. I showed you the bigger M pattern, like this one, but there is a smaller M pattern which is also forming, and that is just around here. So if I draw something like this, and if I go to the weekly time frame, it will make more sense. So you see that M pattern developing, and this can go all the way down to 88.23. In fact, it can actually go a little bit deeper down into 86 level or so. But for that to happen, it needs to break through this zone of 91.91, and it will also have to break through this level which we had as a demand zone. So we can play that if the market gives that opportunity, but for now, right now the opportunity is where we are standing. If you are a day trader or if you're a short-term trader, you can do one thing. You can go and look for a short opportunity, like a confirmation somewhere around here. If we get a confirmation that you can go for a short because there is a W pattern happening right now, and that can actually take you to a lower level. So if I draw something like this on here, this can be a good level, this can be a good level, and this can also be a good level. right, for DXY. And in worst case scenario, obviously this is going to be another level, because this also acted as like support here. And finally, if the market keeps on going down, then obviously we'll be back into this zone, and then we'll have to see like where the market is expected to go. But if the market actually goes up and performs a retest, I'll be looking to buy, because the higher time frame is saying that I could be looking for a good long position here. Okay, so let's go in here and see if we have got any kind of like confirmation on 4 hour so far. On 4 hour we already had a signal on water, so this is the signal that we have, and we had a signal here. Now this is telling me in advance that it wants to go down. The market got pushed back up, but we can never take that trade, because the color here is red, so we cannot take that. And so far it hasn't actually hit the stop loss of the previous signal. It came very, very close, but it probably not got hit, depending on the broker that you might have. And it is kind of like creating a divergence kind of play. So if you bring in RSI, most probably this is looking like a divergence kind of play. And what we can expect is that if the market starts to go down and it breaks this level, then it will start to form an M pattern, and that is the possibility that you have. So if you get another like arrow like this, water arrow, then you can go for a short position, and that's what I'll be also looking for. If the market actually goes above this high and performs a retest and I get a long position here on water, then I look for a long position, as I mentioned before. And this is the W pattern that you're looking at. So that's how we plan it, and that's how we do the entire analysis, top-down analysis, using FCP strategy. As I mentioned, if you're interested in learning more, then you can find more details about this in the description below, or go to Vikinsa.com and check out our training section in there. Hopefully this was educational for you. Hopefully this was informational for you. If you found this useful, then leave a comment and let me know what you think about this analysis. What is your opinion, and what is your opinion on the market, and in general as well. And do not forget to like and subscribe. If you subscribe to the channel, then you will get more of these videos, these quality videos, where I'm going to discuss the entire strategies and trade setups and everything. And do not forget to also share this video with other traders and trading communities, because that's how we learn together and earn together. Right, so stay safe and trade well, and I'll see you in the next one. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.